Am I audible to you?
Yeah, audible.
Awesome. Thank you, Raju. Zubin, Atul, Raju, and everybody else who's not turned your videos on, if I can request you to do that, thank you very much.
Hello. Hi, Karan.
Hi, Vikas. I'm guessing that is you because I can't quite see you intentionally. So, Karthik, how are you doing?
I'm very well, Sharad. Thank you. For a
You?
Saturday, it's lovely.
That is good to. Samir, I will definitely know the date and time for today. Sorry for putting you on the spotlight. Alrighty. Sorry, while the rest of us are joining in, I thought it would be a good idea to just, instead of staying on mute and not having any kind of conversation going and, waiting for the rest of them to hop in, I thought it would be a good idea to at least build some kind of a confidence into the rest of them who have not explored this alternative of either with Volt or borrowing against the mutual fund. So I see a few folks over here who have already borrowed against mutual funds. So, anybody like to volunteer in terms of what has been your experience registering on the Volt platform? And I say registering on the Volt platform, which means right from the time of registering, giving your OTPs, getting the money, clearing it out, EMIs, notifications, everything that is required. So that will be a little bit of a confidence booster for those who have not explored this just at the moment for whatever reasons. I mean, I don't like using debt, whatever. So anybody would like to volunteer?
Yeah, so maybe I will do first. So
Thank you.
it is just too many clicks at the time of registration. You just keep clicking, and somebody like me who doesn't understand the terms and conditions, it is a little scary to keep clicking, and you can't read everything, even if you want to read, you can't understand. But yeah, once that is over and all the OTPs are taken care of, uh, it's a very easy to use platform, and it gives you that flexibility. Like whenever you need that little extra money, maybe it's for investment, maybe sometimes for your personal use as well. It's very easy to get credited, and it's very flexible in terms of paying back as well. So overall, it was a good experience.
Thank you very much for volunteering, Atul. That is quite helpful. And now, for those of you who have GHL, I'm talking about your very first investment, which we started sometime as early as April or June of last year, right? Obviously, it is not completed the tenure of 2 years, but it's at least done 50% of the tenure, which is 1 year. So any one of you who I'm pretty certain a good 80% of them on this call have invested with GHL, I'd like to understand, for the benefit of our audience, comfort and assurance, right? Anybody like to share your experience with GHL so far?
Okay, I can go. No, I can go.
Thank you, Doctor. Yeah, go ahead, please.
It's like experience is highly positive. I mean, there was no. I mean, everything went smooth from the. Well, what did we do actually? I'm just thinking. My memory always fails me, but that's typical, isn't it? Basically, this was a signing document, if I remember right. We know after all this kind of stuff done, you get something in the post, which was. I would say, I love these India posts because of those signatures, which is, I don't know, I think it's to do with the legal thing that's mandatory. And so you have this nice person from India Post come along and, chit chat to you. I like chit chatting, obviously, that Sharad. So they come around, bits and pieces. But it was straightforward. You sign that and we sent it back. I forget whether to you to straight to them back. Simple as that, actually, as it. And after that, you park the money in whichever account it is and it goes away. And then month on month, it's something knocks onto the account and gets going that way, so it's basically, from my point, it's simplicity. You carry on with your life and that carries on its own way, actually, as a child. No problem. Even if they raise their hand again, I'm going to raise my hand again, that kind of stuff. So if anybody is thinking, please do join the boat.
Thank you for sharing. Now, Doctor, because you volunteered, I can't quite correct you on this call, but then we will talk about the process later because I think you gotten way too comfortable with the process. However, what Doctor is mentioning, folks, for those of you who are not on board just as yet, the entire process with investing in GHL is very straightforward. Once you decide the amount of money that you're looking at, first, after you invest, you get a certain amount of money coming in cashback, depending on the slab or depending on the investment amount that you've done. By the 15th of every month, the money gets credited, the interest payout gets credited into your month after a 10% TDS that gets deducted, which is important for you to know. And after that, it's like clockwork. Money keeps coming in. And I don't think, from as much as I know my money and from any of my family's money, there has been no delays, defaults until
No.
now. Again,
Yep.
it's too young, it's too young a company. But the instrument is something now. If you're asking what is GHL as an instrument, if some of you are on this call asking that question, it would be a good idea to get in
Hello.
touch with.
Sorry.
Yes, sorry, Juliet.
Sorry,
All
sir.
right. So the piece being, you all could get in touch with Gautam, ask for the webinar recording of what GHL stands for, and then everything in terms of why, how, pros, cons, tax benefits, everything is explained on that call. That's another 90-minute recording. Okay. Please make it a point that you understand both these instruments before we begin. The reason why I thought this was important for as icebreaker for our conversation today, please, before you execute any transactions as per what we're going to be learning on this, you need to understand how Volt as a platform operates and how GHL as a platform operates. This, by the way, is only for folks who are resident Indians, not NRIs, not Indian by origin and things of that sort. Only applicable for portfolios that are held as resident individual status. Okay. So with that said, let's get straight into our conversation for today. I'm going to begin sharing my screen. Please let me know if my screen is visible to all of you.
Noted. Yep. Yes.
Thank you very much. All right. So give me a quick minute here. As you can see, there are some glitches. Right. So that's the heading, optimizing your mutual fund portfolio with loan against mutual funds. Right. For those of you who already used Volt's service, a lot of what I'm going to be talking for the first 5 minutes will be a repeat. Bear with me, and if you'll have missed out something, it would be a good idea to pay attention to these pointers. It is very important that you understand that everything that we're going to be doing for the very first time in how many ever years we had our engagements for, I have never asked you all to borrow against your investments. That has never happened. Loans were still okay, depending on how the numbers play out. But I have never asked you to borrow against your mutual funds or any investments and make an investment basis this borrowing. This is something that I started doing after I purchased my office and not liquidating any of my investments. So my entire office space, irrespective of how much money we cleared. Sorry about that disturbance. Irrespective of how much I've cleared so far, all of my money, the entire loan is 100% on debt. There is nothing, and I mean nothing that we've got in terms of ownership and equity. So I'm using everything that I'm going to be talking to you all in terms of tax optimization, loan optimization. This is something that I've already been doing. From a regulation standpoint, it is all allowed. Those of you who do not have your own accountants or who are working with other accountants and not sure, verify this with them, because when your ITRs are going to be filed, it is going to be them who are going to be filing this. So please make it a point that this is absolutely discussed and you're very sure about this, because you are going to start paying interest of 10.5% starting right from day one. For the year, you will end up paying 10.5%. So it's very, very important that you file your ITRs well ahead of your deadline. All of these interest benefits and things, if you miss out the deadline, chances are that you will not be able to claim these benefits. So this is the first disclaimer that I wanted to add. Okay. Now that we've got that pointers taken care of, let's understand the different taxes. For a majority of us, our taxes are broken down into two segments. One is a capital gains taxes. One is an income tax. As we already know, just to highlight this again, income tax is all the taxes you will pay on fixed income. Wherever there is a fixed percentage of return, EPF, PPF, PPF is not taxable. Post office schemes, FDs, RDs, all of these where there is a fixed interest number mentioned right at the start, those will be taxed as per your tax slab. So if I'm in the 30% tax slab, if I'm getting a 10% return on my fixed income instrument, I will end up paying 30% taxes on my 10% earning, which will net give me a 7% yield. That's my effective yield. Capital gains taxes work very, very differently. It has nothing to do with your income tax or your tax slab. And therefore, depending on the tenure of your holding of the investment, short term, you'll end up paying 20%. Long term, you'll end up paying 12.5% taxes as per the current budget. For this particular webinar, we are not going to be worried about capital gains because everything that we are discussing today is going to be on fixed income instrument. All clear so far? If there is, please show me a thumbs up. Thank you. Excellent. So now that we've understood the fixed income side of things, which means if I'm earning 20% in taxes, 20% on an investment that I've done, as per current tax guidelines, if I'm on the 30% tax bracket, I would end up paying 6% of that 20% as taxes. Clear? 20% return, 20% on 30% tax slab is 6. So I would pay 20 minus 6. That would be my net effective yield after taxes. All good so far? If yes, show of thumbs, please. Those of you who've got your videos turned off, if you're interacting, I would not be able to, check your body. I mean, whether this is making sense, not making sense. So please, by all means, turn your videos on. It's the same guy that you're working with, not some marketing or a sales consultant. Yeah. So with that said, let's go to the next window. A few pointers that I want you to remember when you all are going to be doing this transaction. Point number 1. This is a yearly renewal of your loan. What does that mean? When you borrow against your mutual fund, in all likelihood, you're going to be borrowing from an entity, from a financial institution that is going to be giving you this loan for 1 full year. Is that making sense? Which means because we are taking an investment with GHL is going to have their product ticket sizes, or rather their products NCD tenure is going to be for 2 years. Which means you will have to renew your loan that you've borrowed against mutual funds for the next year upon completion. Again, you will get a reminder on the 11th month whether you want to do this or not. Therefore, you can do this pretty much automated and you don't have to worry about this. Yes, these are pointers that I'm sharing with you all so that we are absolutely aware and you're not going to be taken by any kind of unpleasant surprises. So that is one. Next, what you're going to be doing is clearing your outstanding. Please understand, we are going to be borrowing against your mutual funds. While you're doing that, unlike all the other forms of loan, whether it's a vehicle loan, whether it's a car loan, whether it is your travel loan, personal loan, home loan, all these other forms of loan, when you're paying your EMIs, they form 2 components, your principal component and your interest component. When you're borrowing against your mutual fund, at least with the Volt platform, you will be paying only the interest component. So your principal will continue to be there as an outstanding. You're only paying the interest component. Is this making sense, everybody? Right? So when your renewal is due, you have the choice of clearing your outstanding at any given time without pre-closure charges. If I were you, and this is what I'm doing, I repeat, I am not paying my principal amount back. Why? We'll get to those numbers in just a bit. But if you choose to, one of the best ways to clear your principal outstanding is when your bonus money comes in, use your bonus money to clear the outstanding. If you don't like the concept of having to have a debt, by all means, go ahead and close it by using your bonus money. Yes? Okay. Sandeep, I see you raised your hand. Please allow me time to complete the slide and then we'll take the questions. Okay. Last but not the least, remember, when you borrow against your mutual fund, the collateral that the institution is going to use is your units against the mutual funds that you are borrowing. So if there is 1 crore of investment that you've got and you're borrowing, let's say for 20 lakh rupees, 20 lakhs, whichever funds have been allocated, these funds will not be available for redemption in the future unless you clear the loans. Okay, let me repeat this again. The collateral for the loan that is borrowed will be the mutual fund units that you currently got invested in. And for some reason, market corrects, fund is not doing too good, fund managers change, you want to do any changes to those funds that have been hypothecated, you will not be able to do any changes. Any withdrawals will not be able to be done. All good so far? Okay, those of you who don't have your lines muted, please mute your lines. If there is no questions or there's nothing that you'd like to ask me, please have your lines muted. Sandeep, please unmute your line. You had a question for me?
Yes, sir. As far as old is, remember, I remember it was a choice for us whether you pay only interest or interest with principal, isn't it?
Depending on your institution that you're borrowing, the ones that I'm going to be asking you, you have a choice. I will not, please remember, I do not want you to pay your principal component back.
Okay.
Your interest is a fixed interest. It is not a varying interest. So if it's the interest at the moment will be 10.5% toward the end of your tenure.
Okay.
Okay. Now what? So now that thank you for asking the question, Sandeep. And now that we've spoken about 10.5% being the interest, I'll stop sharing my screen. And I'd like everyone on this call to tell me what are your thought processes or what are the things that are coming to your mind when I'm saying 10.5% interest. You're going to end up paying 10.5% interest.
No, good deal.
Anything at all? Sorry?
Good deal to get loan.
Okay, yeah, that's because you've already borrowed. But what about the rest of you?
Be lower than the personal loans.
Okay, that is a fair point. But
Sure.
Ganesh, now that you're paying 10.5%, does it make sense to borrow against investing? We've all grown up thinking loans are bad. Home loan is your best loan that you can have because the interest rate is as low as it can get. Anything else, it's double digit, doesn't make financial sense. Why borrow? Why have loans on yourself? And might as well live debt free.
Considering probably at least in say at the end of the year or whatever, at the end of the tenor, a 15% return is expected. Still, it's much better to say pay this and then gain at least 3 to 5%. Probably I would like, given that the growth story we are all seeing or we are all expecting, right? Probably that be there, but unless if I don't have a dire need, I will not take loan.
Yeah. So this is interesting that you're mentioning Ganesh, but when you're saying growth story, I'm referring to, I think I'm assuming you're referring to the market growth. Is that correct?
Overall India growth, which will help the market to grow.
We are not investing in the markets, no?
No, that's fine. But at the end of the day, my mutual funds is growing, right?
But I'm asking you to borrow and invest in fixed income instrument. That has nothing to do with the markets.
If I don't have a need, why should I borrow?
Fair. Valid point. Thank you for being candid. Sridhar, you had a few pointers to share.
Yeah, I think leverage is the right thing to word comes to my mind. Leverage and grow in a fixed instrument also is okay.
So tell me more, Sridhar. I mean, I know because of what you do, I know you know the answer. But for the benefit of everybody else, it will be nice to get answers from the audience as against every time Sharath pointing out the pointers. So why don't you share your thoughts? What about leverage?
See, for example, I have 25 lakhs in mutual fund.
Right.
So if I get capital of say 15 lakhs also, and I get 5% extra money on that, which is not bad.
Excellent. Very nice. Good. Thank you very much for sharing. Any other pointers, ladies and gentlemen? Okay.
And also the interest part, I think we can use it for the tax benefit also.
That is a little tricky. That's a valid point, but it's a little tricky. So very quickly, ladies and gentlemen, here is the calculation. Let's say I've invested 10 lakh rupees. Okay. I've invested 10 lakh rupees because we're going to be, okay, I need to know all of the money that is going to be borrowed against mutual fund will be invested only with GHL and nobody else, for the simple reason that we're getting 24% return on the capital invested. Okay, 24%. Now, for those of you who don't understand in terms of how these interest rates are calculated and what is the what are the parameters that are evaluated or considered when you're doing this calculation, understand that 24% is a 2% monthly payout from month 1. We are not waiting for the year to be completed. Therefore, you will be making returns much more than 25% if you look at the IRR aspect. Okay, that is a very important aspect. So now if you look at this, 10 lakhs invested, I'm going to be getting a cashback of 1%. A lot of you who invested in GHL for the very first time, you ended up getting a small cashback. and you are of the opinion that this was your interest payout, it is not your interest payout, you get a 1% cashback on the money invested. So in this case, it is 1%, and then through it, that you will get 10,000 rupees coming back, right? After that, you have the 24% return on 10 lakh rupees. This plus this component minus your interest component, which is at 10.5% interest. Okay, 10.5% interest. Now you do the math. You end up earning an extra 1,45,000 rupees every single year on money that is just lying, or on money that was just doing nothing but growing as per the market. Please understand, I am not talking about borrowing and investing in the market. I'm talking about borrowing and investing in a fixed income instrument. Now that I've shared this calculation, would anybody like to point or ask, check, or clarify any of these numbers?
There would be, hey Sharad, there would be interest, tax on this amount as well, right? That 1,45,000 that you're gonna earn.
I was hoping somebody will ask that. So net yield after taxes at 30%. Okay, so I'll take this. This is my return. Now, my return is into 30% over here, which is
70. It would be 70, right?
not really. Why do you say 70?
After tax.
If you
No,
apply directly
43.
0.7,
Okay.
So I will be making at least 43 and 30% of this, of the amount that is left over. In other words, I'm making an extra 1 lakh rupees.
Yeah. You are basically paying 30% tax, which according to that calculation is 43,500. So yeah, more than a lakh. That's what I meant, like multiplying it by 70s to know the exact yield.
Correct.
Yeah.
So here's my
24%.
24% is the return that we get on the investment, Kavita.
Isn't that a very optimistic expectation?
Okay.
I think
Anybody
we
who's
lost.
invested in anybody who's invested in GHL for at least 1 year and above, getting your interest payouts every single month, could you all tell me if you are getting 24% or not?
Yes.
Okay. Easiest, if you can show of hands, please. Thank you very much. Kavita, the reason why you are not aware of this is because we gave this instrument predominantly for folks who are based out of India, right? This is an instrument that works only for resident individual because of all the OTP, KYC hassles. You also get your NCD documents that needs to have a DMAT account and so on and so forth. So whoever has not registered for the GHL webinar and didn't follow up, we didn't follow up with any one of them. And that's why you would have seen all your reminder messages asking, even if you're not able to make it to the webinar live, please register. So then we will share the webinar recording. That's how we know that you're interested in the product. And for those who do not register, we don't share this because it's not going to be sensible use of time.
Okay. No,
Now,
we'll take this. We'll take this offline, Sharad. Maybe we can
done. No. So, like I said right at the start of the recording, right at the start of this webinar, for those of you who are yet to evaluate GHL, everything what I'm saying, please use it only as educational content. Start implementing only after you've gone through both the webinars, for Volt as how it works as a platform and for GHL as how it works in the platform. After that, if you have any questions, we further get on a call, and only after that do we execute the learnings from this call. Sandeep, Arvind, I do see you all raising your hands. I need to cover a few more things. Let's get this thing covered and then we will talk about it further. All right. Now that we have completed the discussion on 24%, I'd like to get back to a few things on the risk mitigation aspect of things. Yeah. Okay. Another important point that you have to remember is the EMI payout versus your interest credits. Please remember, your EMI for Volt will hit your account by the 5th of the month. However, the interest credits will come to your account by the 15th of every month. Obviously, plus or minus 1 or 2 days for accounting for banking holidays. Therefore, I know most of you always have surpluses in your bank accounts, but because it is important, I need to point this out. If you're going to be doing further optimization, which is reinvesting this money, or if you're one of those persons who making sure that your all your expenses are cleared within the first 10 days of the month, these are things that are very, very important. EMI will hit your account by the 5th of the month. The interest credit will come into your account by the 15th of the month. So plan your cash flows likewise, right? Now, mitigating your risk. Ladies and gentlemen, I cannot emphasize this anymore, and therefore I'm saying this one more time. Please understand, you are borrowing against your mutual fund, which is a fixed commitment that you will be taking every single year or for however long you choose to do this. You are going to be investing in an instrument that is unregulated, which is GHL in this case. You all have been investing, you will have seen, you also know that it's a secured NCD. There's collateral backing against it as well. However, it is still an unregulated space. This is important to know. Therefore, please deploy only the amount of money that you can say Tata goodbye to, or you're okay to wait for a little longer before the money comes to your account. I'm talking about the principal component. I'm not talking about the interest component. Please always account for delay or account for worst happening. And that is why the next point is you will withdraw no more than 20% of the available limit on Volt. For those of you who've already registered on the platform, you will see as soon as you log in with your app, you will get to see how much money is your available limit. I do not want you to take any more than 1/3 of that limit. Or rather, sorry, my bad, no more than 25% of that limit. Okay, let's do these numbers again. When you log into the application and the application says you are eligible for 50 lakh rupees, you will not pull out any more than 25 lakh rupees. You will borrow only for 25 lakh rupees. Just at the risk of repeating again, the reason why we do that is because we want to make sure tomorrow if the market corrects by another 10, 15, 20%, you should not end up having your margins being sold and therefore your units being sold when you're not able to keep up for the margin amounts, the collateral. Is this making sense? And then the most important risk framework that we have to follow is no more than 5%. I'm repeating again, no more than 5% of your exposure should be to GHL as an asset class. Now, 5% of what? Of your entire financial assets. EPF, real estate, not included. So in other words, your money invested in Better Invest, money in Asset Monk, money in mutual funds, money in PMS, all of these different products are liquid products and they're available. If you have a ULIP, include that also as a part of your portfolio. All of this put together, if it comes to 1 crore rupees, you will invest no more than 5 lakh rupees in total with GHL. Okay, let me share a working of this. So we are able to drive the point home. Give me a second. Okay. Like I was just doing the numbers, assume my entire financial net worth. Again, EPF and real estate portfolio not included. ESOPs not included. RSUs not included. Which means anything that is liquid, I can liquidate it today. That's the portfolio that I'm going to consider. Okay. So if that portfolio totals to 1 crore rupees, my maximum exposure that I can invest with GHL as an asset class is 5 lakh rupees. Okay. Out of this 5 lakhs, assuming some of you have already got exposure to GHL, you've taken a 2 lakh rupees or a 3 lakh, whatever that number minus the maximum exposure is the maximum amount of money you can further invest with GHL. Is this making sense? Now, for those of you who are thinking, Sharad, then this doesn't add as much excitement. Let's not chase excitement. Let's chase risk mitigation. Okay. I do not for once want us to go hyper aggressive in an instrument where for some reason or the other, the company could close down, the numbers don't work, whatever the story is. So why this is very important? There have been certain times where we introduced a few products which looked very, very good at the start, and later on, because of demonetization, because of COVID, something or the other went wrong. And therefore, it was not the best thing to have such a large exposure. I'm telling you all of this because of the experience that I have had with the startup that I put my money in. Some of you also got your money, and then it didn't turn out to be a very pleasant experience. So irrespective of how guaranteed, how secure the instrument is, have no more than 5% of your money exposed to one asset class. Any questions on this number so far? You all can share, unmute your lines, share videos, and then ask the questions. Anything at all?
So, Sharath, this will,
Yes.
the liquid asset, when you say, you mean the FD, any
Everything that
FD,
is liquid. Everything that
FDs,
is
mutual
liquid.
funds as well.
FDs, mutual funds, RDs. Okay. FDs doesn't include the money that is kept aside for your emergency fund.
Okay.
Any kind of allocation that is kept for emergency fund, whether it's 15 lakhs, 25 lakhs, 30 lakhs, whatever that story is, that money should not be included because that money is kept very, very specifically for that reason, which is emergency.
Got it. Okay.
Right? So that FDs, RDs, EP, stocks, mutual funds, ULIPs, AIFs, everything included. Any other questions, ladies and gentlemen?
When you said stocks, but not RSUs as a.
Yes.
Yeah,
As in when I'm
okay.
talking about stock as in direct
Indian
equity
stocks.
and
Yeah.
not your RSUs and things that are attached to your companies. See, the idea is you do not want to have portfolios that are blocked and illiquid. If I have a 5 crore property and if I'm taking that as a part of my financial net worth and something were to go wrong, I can't liquidate my property. That's the rationale to it.
Okay, got it.
Any other questions, ladies and gentlemen? This is very important. If we understand this, rest of the entire activity is very, very easy.
There was another step in that
invested amount here, because by using the old platform, we are borrowing money, correct? But what is referred to as invested amount here? In the previous calculation you had shown, 10 lakhs invested.
Ganesh, you know your current mutual fund holdings?
Huh.
Okay. What is your, let's assume your mutual fund holdings is 1 CR. I and you both know the numbers. For sake of privacy, we'll just talk about 1 crore as your number. 1 crore is your entire liquid holdings. Clear so far? How much should you have exposure to it? No more than 5% in GHL. You're investing in GHL as an instrument. I know in this case you have not invested in GHL as an instrument. Therefore, you are allowed to have a total exposure of 5 lakhs. Okay. Even though Volt will be giving you exposure to the tune of 50 lakh rupees, you will borrow only 5 lakh rupees. The 5 lakhs will get invested with GHL, and then here's how the calculations are going to continue. Give me a second. Now, since we are going to be putting 5 lakh rupees, that's the number. Net, this is going to be your entire yield. In this case, you will be making roughly to the tune of about 50,000 rupees surplus on the money that is just staying idle.
Sharath, can I make this a bit complicated now?
Not now, towards the end. I let folks get a grip of what the numbers they're talking. Okay.
I understood. What the interest we are paying out is say 10.5% to the old platform, and whatever invested on GHL is giving a return of 24%. That's how I should see.
That is correct. That is correct. So after taxes and charges, you are making a rough estimate of 10% surplus. You are making an additional 10%. Okay. Now would be a good time to address questions, clarifications, or anything else. I think Sandeep, you raised a hand, and Raju, you also. So we'll go in the same order. Let's continue.
Sure. I think I forgot that. Yeah.
Okay.
No, Actually, last week or a week ago, like, you were referring to some visit in Bangalore, right? You asked, like, if we are coming on the way to Bangalore, like, there is some.
No, that is different. Let's not even talk about that. That's a real estate
Okay.
proposition. Let's not talk about
What
that.
I just wanted to say is
Uh-huh.
GHL and that same.
No. GHL.
So GHL
I'll
is
talk to you
Chennai
after this
company.
call.
Chennai company, you mean to say, right?
Yes, it is.
Okay. And now I got it. Thanks. Okay, that's what I just wanted.
All right, Raju, what's your question, please?
Yeah. So the math you have put together for 10 lakhs and the 24 delta of 10.5. And is it necessary, for example, as you've given the same example of 1 crore mutual funds and I draw 5 lakhs, why I should invest if I am under 33% bracket? Whether if you have your partner to invest, you will have less taxes to pay.
Very good question. So as always, there is a final slide that says in terms of how to optimize. And since you've already got to the point, here are the 3 ways on how we are going to be maximizing this particular transaction or this particular strategy, right? Number 1, you are going to be focusing on the tax slabs. So if you have a spouse who is on a lower tax bracket, please make the investment in the individual who has a lower tax bracket in the house. If both of you are in the 30%, so be it, then you can't do much. Big brother has to make money first. Right? That's how it is. Now, if you have your spouses are in the 10%, 15%, 20%, whichever slab that has been introduced, please, by all means, invest it in the individual who has a lower tax bracket. One, what is very important, ladies and gentlemen, please hear me out. The borrowing should be from the persons, from whoever is borrowing against the portfolio should be the name of the investment, which means you cannot borrow, because I know some of you have lesser investments in your spouse's name. So now it doesn't make sense for you to borrow in your name and then make the investment in your spouse's name. Doesn't make sense. Then the tax mitigation is not coming, because you'll not be able to offset the interest that is charged. The person paying the taxes and offsetting the taxes should be the same. Is this clear? Excellent. After that, you're going to be benefiting from cashback. Now, I have taken a standard cashback number at 1%. What I've been told that GHL is working for me on is we will get 1% cashback till you're paying 4,99,999. The minute it comes to 5 lakh bracket, you will get 0.5% extra. So instead of 1%, you will get 1.5% cashback on the entire money invested. Okay, and if you make an investment at 10 lakh rupees, you will get a 2% cashback on the entire money invested. Now, once again, don't fall for 0.5% extra earnings coming in. Adhere to the risk framework that we've set. If you've already got 5 lakh rupees invested, by no means should you invest an extra 10 lakhs. If your limit says 10 lakhs is all that you got to invest, stick to 5 lakh rupees extra that you have to do. For that extra 5.5%, let's not take risk. Let's not give any room allowance for breaking the risk framework that we've created. All good? Last but not the least, reinvesting the surplus. For all of you, I mean, now even at 10 lakhs, if you see, some of you will be thinking, Sharath, first of all, you got us to come on a Saturday after doing all hype on this product. And then after putting 10 lakhs, I'm going to get only 1 lakh rupees chicken feet money. Because some of you are there, and that might be, let's say, weekend or that 4-day getaway plan. Now, for all of you who have invested in the past and you are reinvesting the interest payouts, you'll have made a minimum 12% return on your SIPs of their invested capital. Yes or yes? Right? While these monies will be seeming very small, they all add up towards the end of 2 years. Right? And for some of us, I know for a fact how well your companies have been giving bonuses. An extra 2 lakhs on money sitting idle is phenomenal. Remember that money came without you having to work or without you having to pay taxes on it. It is free money that is coming. So yes, if you're saying, Sharath, after this also you're going to ask us to reinvest in, that's a choice that you completely can make. 10 to 15% will be your additional return that you will get depending on how long you're going to keep the interest component reinvested. Again, needless to mention, like always, because we are going to be borrowing and investing, this particular reinvestment will go in a separate fund that we currently do not have exposure to, such that towards the end of 2 years, 3 years, or 4 years, whenever we decide to close this, you will know that all the interest that you reinvested, this is your money coming in from this specific activity. Right? So that brings the end to our discussion today. Surprisingly, we've been able to.
Sorry, can you repeat it again?
1 second.
No.
Sorry.
Can you repeat it again? What you just said?
Which specific one?
The last part, what you said, the reinvesting part. And I didn't.
So, if you look at your portfolio right now, Sandeep, there are certain funds that we've allocated exclusively for interest payouts. Like if you you've invested in Asset Monk, right?
No, Asset Monk, I didn't participate.
Okay. That's why probably you're not able to relate to what I'm saying. These kind of fixed income instruments that are paying quarterly, yearly, half-yearly payouts, I have selected a very specific fund for this money to be reinvested.
Okay.
So when you're taking a look at your entire portfolio, when you see that particular fund, you will know that this money is completely coming from the interest payouts and how much further did it grow instead of just leaving it in your savings bank account.
Okay.
So that is.
Can I say something?
Yes, Raj, go ahead.
I invested in Asset Monk. For Sandeep, maybe reference. Every quarter we get some amount. There are instruments getting automatically as it credits. Again, Sharad and team really systematically puts this back because you forget that. Otherwise, you withdraw, then it will get lost.
Right.
Over a period of time, you really see that the surprising amount. One is you're earning the instrument and reinvesting in the, again, DHL, it looks like a yearly 50,000, but as every month it gets credited after your interest being paid, that when you reinvest, is market also will take you whatever the growth happens. Is the instrument combination of your instrument of this special plus market also takes together, it is a bonus for us.
Okay, got it. Thanks.
Hey, Sharad, I had a question. What happens after the 2 years lock-in? This is Harish. So after the 2-year lock-in, does it like you can continue it again or the money comes back, the principal?
I see. Okay. Because of your second part of the question, I know why you're asking it. The instrument as GHL, they end up paying a capital back because after your NCD is closed, the money comes back to your bank account.
Oh, okay.
Whether you want to restart the entire process all over again, that is all up to you.
Okay. So
see, what I've not told you all is all of us have been, have grown up in a family where having debt is really bad. A majority of us. Right? What I'm trying to show is that, listen, if the entire entrepreneurial world is making money on borrowed money, why can't we start doing it and start learning how to optimize our taxes? Because let me see if any one of you are newcomers here. No, a majority of you all have done everything that is possible in order to be financially prudent. Now we have to use a little better skill sets or better strategies to make your returns work much harder. Today, I'm giving 24%, and some of you are still very scared whether you'll actually get 24%. Now, I will start getting you some regulated fixed income instruments that will be giving you 12 to 13% returns. Okay? And that has no bearing. That has no limitation of only 5% or 10%, 5% or 10%. Borrow as much as you can borrow. Correct? So if you're limiting your borrowing to 25% on 1 crore portfolio, how much is 25%? 25 lakh rupees. If you're going to make an extra 2% on 25 lakh rupees, how much is that? 50,000 rupees. Some of you are on this call who've got at least 3 crore, 5 crore, 7 crore portfolios. Now do the math. For some of us, that's our vacation expenses for the year. Right? And I'm not even talking about those folks who have got a business income. For business income, it's a separate tax benefit. I'm talking for all of us that is only as salaried earners. Is that okay? So why GHL? Because of the high interest that they're giving. Whether will they be able to give us the similar kind of returns in the next couple of years? I don't know. Because see, liquid loans as an instrument was a phenomenal instrument, but RBI came in between and that one went off. Right? Better invest for all of us who are investing and using that as one portion of our emergency fund. that very shortly, if I'm not mistaken, from what I hear from the leadership, they're going to be discontinuing it because they're going to go through the AIF route, which means a minimum ticket size of 1 crore. So I can't plan this for beyond 1, 2, or 3 years because it depends on how the economic situation is changing or tax guidelines are going to be changing. Our job in terms of being good stewards of our money is to see what's the best that we can do in the timeline with the benefits and the tax guidelines that are available to us.
Yeah, my question was more about whether do we have the option to roll over that money that we have?
100%. 100%. That's why I said it's a yearly renewal. See, there are two aspects here, Harish. One is when you're borrowing the money. One is when you've invested the money. Borrowing happens every yearly renewal that you have to do. Reinvesting the money depends on whether GHL is going to come out with another product or not, because GHL is getting into the agroforestry business as well.
I was talking about the GHL side of things, like that.
Yes,
whatever
yes. If
invested
they have the opportunity
principal.
available, yes. If they have the opportunity available, why not? The money definitely comes back because as per, if you read the NCD terms and conditions, your money will come back at the completion of 2 years.
No. I'm not saying the money coming back. I'm saying that same money, if I want to roll over for another 2 years, do I have the option or there's no such option?
There should be an option available from GHL, no? Because see, what is the underlying asset? The underlying asset for GHL is one parcel of land that they have looked at borrowing again, buying, and what is this? Flipping over. After 2 years, see, they don't have opportunities available for 2 years, 3 years. Every parcel of land that they're buying is a timeline of between 3 to 9 months time. So after 2 years, if they have that proposition available, then they will give you. If not, then that opportunity doesn't exist. So that's that.
Okay.
Quick question, Sharath. One is that you mentioned in a family, both individuals one has a 90% investment and other 10%. When you borrow the loan from who has invested in 90% in mutual fund, we can't invest through the 10% holder through the DHL to save the tax bracket.
No, so let me rephrase this again. Let's say I'll give you numbers, okay? Geeta has got 25 lakhs in her investment and you've got 75 lakhs in your investment. 1 crore is your total. But when you go onto GHL platform, Volt's platform under your name, it will only show the mutual fund holdings or liquid holdings that you have. So 75 lakhs, or let's say this is 70 lakhs that you have in your name. You will have a borrowing limit of 50% of 70 lakhs, assuming there is no tax saving funds, no lock-in funds, none of those, because Volt only gives this against actively open-ended funds. Right? So assuming all of them are open-ended funds on 70, 50% of 70 lakhs is how much? 35 lakhs. Of 35 lakhs, I want you to borrow only 50% of that, which is 17.5 lakh rupees.
Okay.
Right? And if you're doing it in your name, if you borrowed in your name, then you will reinvest you will make that money, that investment in GHL in your name, not in Geeta's name.
What is the roadblock for that? We can invest,
because
right?
You are paying the interest, right?
Okay.
You're borrowing, so EMI is going from your account.
Yes.
In this case, in whose name we are doing the interest investment?
Geeta's name, for example.
So Geeta is earning the interest, you are paying, you can't offset this.
Okay.
So
account transaction, right? This is account transaction. It is, offset is in a family, but
No.
as long
Income
as
tax department doesn't look at it that way. The interest paid and interest credited should be in the same account.
But where we are getting a tax benefit?
Let me rephrase. GHL is giving you 24%.
Okay.
How much is Volt charging you as interest?
10.5%.
Okay. 24% minus 10.5% is how much? 13.5. Let's say 13 for simplicity's sake. If I was not paying interest, what would be my taxable amount on 24%? 30% of 24%. Is that correct?
Correct.
Now I will pay, because of this calculation, how much will I pay taxes on? 13.5% of 30% of 13.5%.
Yeah.
Because whatever I'm paying off as an interest, I can offset that.
I'll put this way. if somebody is in a 10% bracket, okay.
Then that question doesn't even arise. You're right.
Exactly. Now my point is why I should even pay 30% on my 14% return after the offset.
Right.
Rather, I pay on 24% the 10%.
No. See, you're right. Spot on. If that individual, if you're planning to invest in your parents' name as well,
case to case. That's what I mean.
100%. 100%. See,
So
this is.
There is no binding or solution. We don't have such that the who is really borrowing the money only has to invest. It's not necessary.
See, ultimately, as always, Raju, when you decide, okay, this is of interest, let's begin. Gautam will reach out to you all. We'll get to know how much money you all are going to be investing, in whose name, etc., etc. We will ask that person.
Sure.
This is as a reference.
Yeah,
What we will actually do.
Yeah, I just want to be clear that there is no
hard and fast
constraint to really make this model work, right? No constraint.
That is correct. Thanks. Some of you all would have noticed that I'm a banya, right? I want to make even 1 rupee, squeeze out as much as we can. Why not? So that is my thing. I mean, for some of us, you're like, Sharat, we really want to go through so much of pain and effort. I mean, it's not coming free of cost there. It is very taxed, paid money. I like to generate as much, squeeze as much as I can.
Thanks.
Thank you, Raju. Any other questions, folks? Yes, Zubin, please go ahead.
Sure. Last time we had a talk with GHL team in a seminar. They said that initial investments that they offered was for 25%. Following investments would go around 18%. So
no, it is not. It is still going at 24%. Yeah. Before bringing this, I had spoken with the leadership. We've come up with a separate program only for this particular purpose. So that is it. Right. Varun, you have a question. Please unmute your line.
Yeah. I mean, just so I understood this correctly, what you're saying is, like, let's say I don't have to pay 30% on the 24% that I'm making. I can net off with the 10% that I'm paying to Volt. Under what section can I net this off?
I don't know the section.
That's a different
question.
Simple
taxation. Varun, let me make it simpler. Today, if you are just filing a regular ITR, apart from the income earned, let's say you had kept about 10 lakh rupees of yours sitting in your savings or FD income. What will that income come in as? Other income, interest income. When your ITR, it will show up as interest income. Is that correct? So from your taxable income plus your interest income, both of this combined, and then you will pay your 30%. Is that right?
Right.
Now, just like how you have capital gains and capital losses, how you net off. You can net off fixed income interest minus fixed expenses.
Understood. I got the point. And the second question is, apologies, like you might have covered this. I joined in a bit late. So if there is a one-line summary that I have to get here is like you're saying, if there is GHL is basically giving me a 24% fixed income. Why not kind of leverage my mutual fund portfolio to earn that extra 12-13%?
Let me refine that a little better. You are anyways having a mutual fund portfolio which you're going to be staying invested for the long term.
Right.
Might as well borrow against it and make that earn a little better. Why GHL? Because it's giving the highest fixed income interest, which is collateral backed.
Got it. I think this makes sense. I just wanted to make sure my understanding was right. That's it.
Yep. What else?
I think that's all. Sure.
Any other questions, ladies and gentlemen? Surprisingly, we finished I think this is the first webinar we are completing before 1 hour. While we had so many things to discuss, I'm super happy. Any questions? Okay. Then for every one of you who are on this call and who are going to be listening to the recording, the next steps for this. First, you will reply in the group saying, as far as the borrowing against mutual fund is, this is something of interest to me. Let's schedule a call and talk a little further details. I am not going to be available for you. You will have to pass on the details to Gautam or in your respective WhatsApp group. This is the amount that I'm keen on exploring. Please let me know how much can I actually invest basis my current investment style and in whose name you would like to do the investments. After this, Gautam and team will go about giving you a structured portfolio, which will eventually be verified by myself, and then the execution will be as standard. We'll give your approvals and everything will go via email. So please remember these pointers that we've spoken about, and basis that we can take things forward. All right. Okay, then, ladies and gentlemen, have a lovely evening. Take care, enjoy your weekend, and I will talk to you when I talk to you next. Take care.
Thank you.
Sure.
Yeah.
Thanks, Sharad. Thank you.
Thanks, Sharad.
Yeah. Bye bye.